Hello students, welcome back in the second session of the day. In the first session, we had studied about journal and journal entries. Now, I hope you must have got some idea about how to pass journal entries. Now, in this session, we are going to learn how to do journal entries, and this will help you further to have a better understanding on the subject. Clear? So let's begin. I have taken up illustration number 4 of chapter 8 from T.S. Grewal. Okay? So let's begin. Pass the journal entries for the following transactions. April 1, 2020. Pawan started business with cash 1 lakh. This entry is very simple. On April 1, 2020, April 1, Pawan has started business by introducing 1 lakh as cash. So, we can identify in this transaction two accounts which are involved are cash and capital. Cash is being introduced. So, cash is your asset. An asset comes under real account. The rule for real account is what comes in is debited. So, business is getting cash. So, it will be debited. Okay. And why you are getting cash? Your business is getting cash on account of capital. Capital is provided by the proprietor Pawan. So, Pawan is a personal account. Credit the giver. He is giving to the business. So, to capital. Once again, let me tell you, whenever two accounts are concerned, you have identified, then the the account that is going to be debited is written first this way, and in front of that account we use the abbreviation DR. And for the account which are to be credited, before that the word to is used. Okay. So, as I told you in the morning, in ledger folio we are not supposed to write anything. So, amount is 1 lakh. Okay. So, we will have a narration being capital introduced by Pawan. Clear? Now, on April 2, the transaction that took place was opened bank account with check from saving account. Opened bank account with check from saving account. It means now we can identify, since the business is having only cash, he is providing further check from his bank account, personal bank account, that is saving account, in order to have an account with the bank. Okay. So, bank account will be debited. Why? Because bank is a receiver, bank is institution, debit the receiver, personal account. To here we will write capital, because he is in fact indirectly investing this amount from his personal account in business account. He is transferring this amount from his personal saving account to current account of the business. So, this amount is in addition to the cash provided of 1 lakh. So, we will write 50,000. Okay. So, narration will be being account opened by check from personal account. Okay, clear? Once again, the business is getting account opened by transfer of check from his personal account, from the personal account of the proprietor. So indirectly he is investing more in business. Apart from this 1 lakh, he is investing another 50,000 by way of check from his personal account. So credit the giver, personal account. It is also personal account. Debit the receiver, bank is receiving the check. Okay, hope now it is clear. Now we move on to entry number 3. Purchased computer against cash on April 3. April, purchased computer against cash. So your business is getting computer. So we will open account in the name of computer. Computer is your asset, and asset is real account. What comes in is debited. So your business is getting computer. To cash. Cash is also real account, and cash is going out. Amount is 20,000. Clear? Debit amount will be written against debit on the debit column, and credit amount will be written in credit column against the credit account. Being computer purchased. Okay, this is simple. Here both the accounts involved are real account. One is computer, you are purchasing computer, business is getting computer. What comes in is debited. And cash, cash is going out to cash. Okay. Next is paid for repairs of office on April 4. Paid for repairs of office. Amount is 2,500. Repairs. Repairs is an expense. So as per nominal account, debit all expenses. So repairs account will be debited, and you are making the payment through cash. Cash is your real account and cash is going out. So we will write the entry as repairs account debited to cash account, being repairs expenses met, or being repairs expenses paid. Okay. Now we move on to next. April 5. Purchase goods in cash 10,000. April 5. Purchased goods in cash. So whenever goods are purchased, we use the term purchases. Purchases account DR, because purchase is your expense and expenses are debited as per the rule of nominal account. Got it? So you are purchasing in cash. Cash is going out. Okay. So what goes out? Real account. We have to apply the rule of real account for cash. What goes out? And the amount is purchase goods in cash 10,000. We will write 10,000. Being goods purchased. Okay, this is simple. You are making payment for purchases. You are purchasing goods. Whenever goods are purchased, we use the term purchases. Purchases is our expense. Expenses are debited. Cash is going out. Cash is our real account. Clear? Now we move on to next. Purchase goods from Prasad and Company 6 April. Amount is 1 lakh. Purchase goods from Prasad and Company April 6. Goods are purchased. Obviously we are going to debit purchases account. And since this is not a cash transaction, goods are being purchased on credit from Prasad and Company to Prasad and Company. Credit the giver. It is the company that is giving. Prasad and Company is a personal account. Okay, and the amount is 1 lakh. Clear? So we will write narration being goods purchased from Prasad and Company on credit. Okay? Clear? Credit the giver, because Prasad and Company is a Prasad and Company is a personal account, and the rule for personal account is debit, credit the giver, it is giver, and purchases is our expense, so expenses are debited because the rule as per nominal account is debit all your expenses and losses. Clear? So we move on to next. Sold goods against cash 20,000. April 7. Sold goods for cash or sold goods against cash. So whenever goods are sold, you get cash. Cash is your asset, and when asset comes in, it is debited. Cash is coming in business, so cash account will be debited. Why you are getting cash? Because on account of sales. Sales is revenue. It is your nominal account. Credit all your incomes and gains. So sales account will be credited for 20,000 because sale of 20,000 has taken place. Being sales affected for 20,000 in cash. Okay? Cash sales. Cash being asset will be debited. What comes in is debited. Sales being revenue account, credit all your incomes and gains. Okay? So we move on to next. Sold goods to Dev and Company 75,000 on April 8. Sold goods to Dev and Company. Now in the previous entry it was cash. Now you are selling goods on credit to Dev and Company. Debit the receiver. Dev and Company is a personal account. So we are going to debit Dev and Company and to sales. Sales again is your revenue. Credit all your incomes and gains. Okay? It was for 75,000. B. Sold goods on credit to Dev and Company. Now once again let me remind you, many times I am not writing in full just because of the space constant, but you have to write in detail. So you have to write credit like this. Okay, purchased. You have to write the full word. Okay, here you can use dr, cr, it will work, but in narration and in account you have to use full word. Okay, so we move on to next. So students, now we will take up next, and the next transaction is Dev and company return goods, they being defective, for rupees 15,000, and this transaction took place on 9th of April. So on 9th of April, Dev and Company was the company to whom we had sold goods yesterday on credit. So they have returned goods. Now, since they are giving us goods back to credit the giver, this rule will be applied to Dev and Company. To Dev and Company. To Dev and Company. This account will be credited because this is personal account and the rule is credit the giver. They are giving us. And what we are getting? We are getting goods back which were sold to them yesterday for 15,000. Okay. Now the question is, which account will be debited? Now we can say, since the sales is coming back, we are going to use term sales return. Sales returns account debit. The reason is sales was our revenue. When the sales decreases, that means it is a sort of expense. So debit all your expenses, nominal account. Sales is your revenue. Revenue comes under? Yes, comes under nominal account. Similarly, when the sales is coming back, your revenue is decreasing. That means it is a sort of expense. So you can say decrease or debit the all expenses and losses. So sales return account will be debited. Got it? So narration will be being goods returned by Dev and Company. Okay? This is how we have to do it. And let me tell you one thing more. Sales return account is also known by the term returns inwards, because the goods is coming in. This is how you can remember inward. When the goods are sold, goods goes out of the business, and sales return, you are getting back the goods. So inward word will be used. Return inward. We are getting these goods as returned and they are coming inward. Okay, this is the way. In case you get confused what to use, then sales return can be justified this way also. Okay. Now next transaction takes place on 10th of April. April 10. Goods returned to Prasad and Company 8,000. Now you are returning goods to Prasad and Company. You bought goods from Prasad and Company on 6th April and today is 10th April and you are returning the goods back to Prasad and Company. So one thing is sure, Prasad and Company is receiving. Prasad and Company is personal account, debit the receiver. So we are going to debit Prasad and Company. Okay, for 8,000. And why we are debiting him? Because we are returning the goods to him purchased earlier. So you can say purchases returns. When the goods are purchased, purchases is an expense, and purchase return can be set in two ways: decrease in expenses, or you can say it is a sort of income, because your expenses are reducing, it means your income is increasing. Okay, so purchases return is your nominal account, and credit all your incomes and gains. This will be applied, and we will write being goods returned to Prasad and Company. Okay. Now let me tell you one thing more. Purchase returns is also known by the name returns outwards. Why it is known as returns outward? Because goods are going out. When you purchase goods, goods come in. When you return, it goes out. So returns outwards. So we can say sales return is also known by the name returns inwards, and purchase return is also known by the name returns outward. You can use either of these terms, no issue. Both are correct. Clear? And last is paid salaries 15,000 on April 11. April 11, you are paid salaries. Salaries is an expense, and expenses are debited as per the rule of nominal account, and you are paying salaries in cash. Cash is going out. What goes out? For real account. Okay. Amount is 15,000. So we can write in being salaries paid. Okay. Salaries is an expense, and we are paying it in cash. Salaries expenses are debited, cash real account is credited, what goes out. Okay. So gradually you will learn to have master in passing journal entries. You will be able to record journal entries in a proper way. Okay. Be patient, have patience. You will succeed 100%. There is no doubt about it. Clear? So this is the end of illustration number 4, and we will take up one more illustration, and till that time let's wait. Okay. See you soon in the next video. Bye bye. Till that time, do more and more practice. Once again, any sort of question, any sort of problem, any sort of query, you can write in comment box. Clear? Okay. Thank you.